morning. It's the midweek edition of Business Morning on Channels Television. This is where you get 55 minutes of current and relevant business conversations. I'm Imi John Mekwa. We get right into it, beginning with oil prices. It eased on Wednesday as concerns over slow demand from top crude importer China grew after bearish trade and inflation data, eclipsing fears over tighter supply arising from output cuts by Saudi Arabia and Russia. Brent crude futures fell 21 cents to $85.96 a barrel. West Texas Intermediate crude was at $82.71 a barrel, and that's down 21 cents. Both contracts gained nearly $1 the previous day. Both benchmarks notched their sixth consecutive weekly gains last week, the longest winning streak since December 2021 to January 2022. And this was helped by a reduction in OPEC Plus supplies and hopes of stimulus boosting an oil demand recovery in China. Chinese inflation data on Wednesday showed the consumer price index fell in July in its first year-on-year decline since February 2021 as deflationary pressures build in an economy struggling to recover from the pandemic. The inflation report followed disappointing trade data on Tuesday, which showed that China's crude oil import in July was down 18.8% from the previous month to the lowest daily rate since January, as major exporters cut back overseas shipment and domestic stocks. In another bearish sign, U.S. crude oil stocks rose by 4.1 million barrels last week, according to the American Petroleum Institute figures. And that was a bigger bill than analysts had polled and thought it would come out. U.S. government data on stockpiles is due later on today. And from crude oil to edible oil, Malaysian palm oil futures rose on Wednesday after 6 straight sessions of losses, underpinned by a weaker ringgit and a stronger oil. And following that, we can tell you that the benchmark palm oil contract for October delivery on the Bursa Malaysia Derivatives Exchange gained 18 ringgit to 3,711 ringgit. That's about $810 per metric ton. And the MPOB is scheduled to release July supply and demand data tomorrow, Thursday. Indonesia's consumption of palm oil-based biodiesel for the first 6 months of this year was at 5.41 million kiloliters. Daily and most active soy oil contracts eased 0.1%, while its palm oil contract lost 0.2%. Soy oil prices on Chicago Board of Trade was down 0.1%. And we already know that palm oil is affected by price movements in related oils as they compete for a share in the global vegetable oils markets. Grains market now. Chicago corn and soybeans gained more ground on Wednesday, with investors covering short positions ahead of a key U.S. government crop outlook, although forecasts of cool and wet weather curbed gains. Wheat slid as the small demand for U.S. supplies kept a lid on prices. Wheat was down 0.4% to $6.53 for half a bushel. Forecast of cool temperatures and rainy conditions across much of the U.S. Midwest during the next week will boost prospects for both crops. The U.S. corn harvest could be the second largest on record, as rains during July shepherded the crop through its critical development phase, offsetting dry conditions early in the season and hot summer temperatures. A strong harvest would add to domestic stockpiles are expected to balloon as demand for U.S. corn exports wills due to a massive harvest in Brazil, which is expected to overtake the U.S. as the world's top corn supplier. Analysts expect that the United States government, in a monthly report which is due on Friday, will cut its forecast for domestic corn production to 15.135 billion bushels this year from its July estimate of 15.32 billion. And back here in Nigeria, Africa Free Trade Area conversation seems to be picking up on different fronts. Yesterday, it was the Manufacturers Association of Nigeria. They met with some of their members and experts in the industry, and the focus were the hurdles to maximizing the platform of the Africa Free Trade Area and what could be done. We have that and we covered it. And here we have some of those participants sharing their views.
For members.
Some manufacturers meet in Lagos to discuss financing options for competitiveness of Nigerian manufacturers under AFTA. Challenges of surging inflation, interest rates, and lack of developed infrastructure have deterred manufacturers from maximizing the opportunities available in AFTA. Recent government policies have also added to their woes.
I think it's a very laudable objective that rates were harmonized, but there are issues. There's a serious backlog of AFEX that have not been met. So availability is a major challenge, and it continues to create some kind of arbitrary opportunities for those that have funds available. So FX liquidity is a major challenge, and that has significant impact on cost of doing business. The external reserves may not be sufficient enough to meet even a 9-month import. So again, the more you produce and export, the more that we have FDIs coming to, some money is coming to the country to increase our reserves. So manufacturing is just so central to this whole business of growing our economy.
The chairman of the Manufacturers Association of Nigeria has some suggestions that could give soft landing.
Curbing the activities of non-state actors who remain a threat to our sector. 3. Creation of policies that would encourage willing manufacturers to improve on public infrastructures like roads around their area of operation in exchange for tax rebate, just like the federal government has done with Executive Order 3. 4. Provision of lasting solution to the Apapa Tinkan Ports Road gridlock. This is a problem that once it looks like it's getting solved, gets compounded again. The Lagos State government will need to liaise with the federal government to resolve the infrastructure and other challenges within the ports area.
The African Continental Free Trade Area, AFTA, was established in 2018 by the African Continental Free Trade Agreement and has the objective to provide broader and deeper economic integration across the continent, as well as attract investment, boost trade, provide better jobs. However, lack of sufficient collaboration as well as infrastructural deficiencies have hindered the maximum benefit of the platform. Well, still connected to that, despite the progress made, the contribution of non-oil exports to both gross domestic product and total export is still as abysmal low. As a way out, speakers at the 2023 edition of the Zenith Bank Annual International Trade Seminar on non-oil exports in Lagos suggest the need to focus on diverse value-added non-oil exports. One of the highlights of this year's seminar is the signing of a memorandum of understanding between Zenith Bank and AFTA, once again, for the development of a portal to support non-oil export business and advance interregional trade.
Since its inception, the Zenith Bank International Trade Seminar on Non-Oil Export has acted as a platform for non-oil export practitioners and relevant governmental agencies to interact, discover opportunities, as well as suggest solutions to the challenges facing non-oil export in Nigeria. The Group Managing Director and Chief Executive Officer of Zenith Bank PLC reveals the unpleasant state of the non-oil exports while also identifying future prospects and growth opportunities therein.
If we are looking at economic prosperity for the country and reduce of our dependence on oil, we have no other place to go than to look at non-oil export value addition. It requires expanding the range of value addition and exportable items. And when you add value, what are you doing by domesticating value addition? You are domesticating labor and employment here.
The World Bank believes that the effective implementation of the AFCFTA can boost Africa's income by $450 billion by 2035, while adding $76 billion to the income of the rest of the world. These figures highlight the immense opportunities the AFCFTA can bring to Africa and the global economy.
What is even more urgent is the need for us to boost intra-Africa trade. And in boosting intra-Africa trade, to completely dismantle the colonial economic model that existed for the last 60 to 70 years, which keeps us trapped.
To boost inter-regional trade, Zenith Bank and AFCFTA commit to a partnership for the development of the Smart AFCFTA portal. The summit assembles seasoned professionals and practitioners in the trade and export ecosystem to offer their thoughts on growth opportunities in non-oil export industry.
I must confess that the services sector export in Nigeria is quite very low. It's a low-hanging fruit that once it is well structured, yes, Nigeria will be better for it.
Recommendations from the summit are expected to evoke programs and policies that will encourage participation in the non-oil export sector towards a sustainable future of Nigeria's economy.
So there you have it. The Africa Free Trade Agreement seems to be back in the news, even though it's supposed to have been working. And then we have right there from that report with Zenith Bank, the Nigerian Export Promotion Council boss. He's our guest at this time to follow up on that conversation. We know that in recent times, I think from last week, the NEPC has been asking for collaborations with banks to bridge finance gap for exporters and boost export competitiveness. Well, let's see how much he's achieved and how much he got from that meeting with Zenith Bank. Joining us, Dr. Ezra Yakusak. Good morning, Dr. Yakusak. I trust your meeting yesterday was fruitful.
Good morning, and good morning, Nigerians, and thanks for having me here. Yeah, the meeting was very, very fruitful. It was an avenue for exporters, bankers, and all other stakeholders in the export value chain to meet and discuss frankly on issues affecting non-oil export. And as you can hear from the report, it went very well. The Secretary General of the African Continental Free Trade Area was there, and a lot of other people in the export sector were there.
So we're going to settle on after just a little bit, but let's talk about this, your drive for collaboration with banks to get more financing for exporters. Is the challenge with exporters really finance? Because just before the Zenith Bank report, we showed you where manufacturers met, and they also talked about AFTA and their challenges, and they have a whole list of issues. Top on the list seem to be infrastructure, and then you talk about the AFEX challenge, before they now, settle down to capital.
You see, export business, like any other business, require capital. If you are going to tell us the truth, no matter how you look at it, you actually can't do business without capital. And all over the world, most of this capital is usually given to businessmen by banks. And in terms of export business, export finance is very key. As a matter of fact, you cannot engage in export business without the required finance. And you will agree with me that the cause of lack of access to this finance, especially SMEs, is an issue in the non-oil export business. And similarly, the interest rate is quite very high, sometimes 28 to 30%, and that's quite high. And exporters may not be able to cut even in terms of that. And so we decided to call a forum of bankers to train them, schedule officers in the banking sector to train them on export procedure and documentation. What we want to do is, because we receive a lot of reports from our exporters on feedbacks from on exporters on banks, and so we brought them together to even tell them a kind of capacity building to tell them what the entire gamut of export is all about. And because, you have to understand the roles of banks, which is very key. Banks right now in Nigeria, they're in charge of issuance and processing of letter of credit. They also issue various NXP forms, that's Nigerian Export Policies Form, and you cannot engage in any formal export without the the NXP form, that's the Nigerian Export Policy Form. And these are the roles of banks. So banks are very key. So we realize that if we are to promote export, we need to involve everyone in the export value chain to come together and discuss and see how, look at the problems and proffer adequate solutions. And so the meeting was very successful. 29 banks, by the way, they were in attendance. 29 banks in attendance. And I need to also mention that for export to thrive, you see, they need finance, they need to require muscle to ensure that they purchase modern equipment. If you are talking of packaging, if you are talking of value addition, you can't add value without finance. That's the fact of the matter. You need finance to add value. Even at the Zenith Bank program yesterday, the whole concept of the program, it was all about value addition. But how can you add value if you don't have the required finance to add value? So that is the challenge we're having, and that's why we called on that meeting, and the response was good, and we're working on the communique right now.
Shouldn't you be working with the CBN? The last MPC, we saw interest rate increase by 25 basis points. It's now almost 19%. Will the banks not have to work according to the guidelines of the CBN? So, I mean, shouldn't you be dealing with the parents?
Yeah, the parents were there, if you must know. The CBN was well represented because the CBN is more or less a government agency, and any issue we are talking about in terms of fiscal issues or financial issues, the CBN has to be involved, and we've been involved with them. Even the RT200 program, we've had several interfaces with them. The RT200 program that is now defunct. So yes, we are involving the CBN, and very soon, what we intend to do is to take it a notch higher. We intend to organize a kind of exporters bankers forum or exporters bankers dialogue, where we bring the major exporters and of course SMEs and all the bankers together to discuss and see how we can find solution to the issues. I must confess that non-oil export is gaining so much momentum now, because prior to this time, how will you imagine a bank organizing an international trade conference on non-oil export? But this time around, we are seeing that banks are engaging in training people on non-oil export. Banks are organizing international exhibition on non-oil export. And so the consciousness is high, and we are happy about that.
All right, so we'd like to know, what are you looking forward to with this meeting and collaboration you're having with the banks and the Central Bank of Nigeria? Are you looking to reduce interest rate? Do you have special packages? And how do you handle the issue of bureaucracy? Because, I mean, if you speak to a lot of farmers now about the Anchor Borrowers program, they said, oh, yeah, well, it's a good policy and all of that, but accessing it remains, a challenge. So how do you deal with that, learning from some of those lessons?
You see, you will not deal with an issue if you've not discussed with it. That's why the dialogue, and that's why these meetings are very important. You have to face it, look at it, discuss it, and take proactive measures to cope future occurrences. And so our thinking is that at the end of the day, we want to make export business as seamless as possible and less cumbersome as possible, because you will agree with that. What we've received, reports we receive from various exporters indicate that there's a lot of bureaucracy in the system, and like I said again, access to finance, the ports issues are there. I mean, infrastructural deficiency and so many other issues. So this is all embracing. We've started with the bankers. We are going further to, with the exporters and bankers and many other sectors. At the end of the day, our thinking, our objective is to ensure that we make export business as seamless and stress-free as possible.
So help us to understand how the exporters are benefiting from this, how they're able to reach you, to know about your programs, and you're signing an MOU with the banks now, how they will know what programs. Do you have a platform? You speak with them as exporters? Do you have meetings, periodical meetings with them? Or how do you, interact with them easily and open up for them to be able to get information from you?
Okay, talking about platforms, I need to tell you that we have 34 state offices in 34 states of Nigeria. And this year, alone, that's from January to June 2023, we've organized about 240 various capacity building programs where we interface with these exporters, and about 18,554 exporters participated or were in attendance in those programs. What that means is that there's a forum, there's an avenue, we discuss issues with these exporters. And also, our website is there. Anybody that's an exporter, they have access to our website, www.nepc.gov.ng, our website, and of course our various social media platforms. We use them to convey or circulate information to various exporters.
And the AFTA platform is also another one that I guess they say charity begins at home. So if, as Africans, if we were to collaborate within the continent, cost of transporting goods or offering services should be cheaper. But what's really going on there? And I see that you had the Secretary General of AFTA right there at the Zenith Bank event.
Yes, and that is why AFTA came on board, really, because not cost of transportation, really, but cost of intra-African trade is very, very low. It's very low. I must confess this. Compared to other continents, the cost is very low, and that's why AFTA came on board. But right now, in the talk of AFTA, what we are doing is, I must confess that the takeoff of AFTA has been a bit slow. But right now, we are collaborating with the National Action Committee in the African Continental Free Trade area. We are collaborating with them. We had a sensitization program with them, and we're implementing what we call the Guided Trade Initiative. The Guided Trade Initiative is a forum or a platform where we can test run the operation of AFTA. And what we've done is that we've selected 4 exporters to test run that, who are going to export within the African continent. Like I said, it's a pilot program. By the time they export under the Guided Trade Initiative, we'll look at it and ascertain the difficulties or challenges inherent therein. But by and large, it's a slow process, but I'm very sure we're going to get there. And with time, African trade, intra-African trade will improve. I must also tell you that if you look at the 2022 non-oil export performance report, among the top 10 export destinations, there was no any African country. And that, tell us the fact that we need to work more. We need to trade among ourselves. We need to do more trade among ourselves.
Yeah, and for me as a Nigerian, I get even more worried when I think of that figure you've noted. When you look at the list, and then you even look at, even within Africa, we call ourselves the giant of Africa, but we have, countries like, I think, Ghana, they have already started using the AFTA platform, and even if it's, small, but we don't seem to have a lot going on for us as the giant of Africa in things that are supposed to benefit us. We have the resources, we have the human and the natural resources, and yet, it seems we're just down there.
Sometimes you will agree with me that sometimes it's better to take it right than to take it too fast and fail. And so that's what we're doing. It is after it's something that is new. We've never had it before. And so we don't expect Nigeria to just rush into it. There has to be some parameters, some variables that has to be taken into consideration in implementing AFTA. And like I said earlier on, as I'm talking to you, it has taken off now with the 4 exporters that we have identified to test run the process. And once that is done, we'll onboard other exporters on the platform and to see how it goes. But like I said earlier on, it's a success story that is coming up on the way.
All right, we pray for that success. Dr. Ezra Yakusak, the Chief Executive Officer of Nigerian Export Promotion Council. Thank you for your time, and we wish you a safe travel back to your base.
Very much.
All right, we are still doing commodities. It's AFEX commodities time, but that's after this break. To stay with us. Still watching Biz this morning here on Channels Television, and just before we head to that AFEX commodities market, let's head to the money markets now and see the market, how the market performed yesterday with Aniti Edet. Good morning, Aniti.
Good morning, Ini. Yeah. Well, you said something about the money market. The money market, it's more of a bearish sentiment for the treasury bills market as well as the bonds market. But of course, we will be having a primary market auction where the CBN is expected to roll over more than 153 billion naira worth of maturity bills. So, and that's
Anita, I don't think the plan has changed. A majority of our 2023 budget is supposed to be funded from the domestic market. Yeah, so I don't think the change of administration has changed that.
No, you know, it's still the government is still relying on borrowings. You know, they still have a borrowing plan for 2023. The rest of the year. And it's
from the domestic market.
Yes, from
most of it.
Yeah. From both the treasury bills and the bonds market. Don't forget, just this week we had the August edition of the savings bond, and then next week we're going to be having the federal government, the FGN bond. That auction is coming up on next week, Monday. So,
and this is an opportunity for investors.
Exactly.
Like to invest in Nigeria.
Exactly. And the minimum investment for the treasury bills is 100,000 naira. So
that's
you can
chicken feed for you,
Aniti. To some people.
For you.
And then for the savings bond, because it's not just, let's not talk about just the 100,000 naira. You can also invest in the FGN savings bond with just as little as 5,000 naira. And of course, you have good interest on it.
So all Nigerians have the opportunity to participate and contribute to the budget.
Exactly.
While making money.
And to national development.
Okay. So all right. Thank you.
So this is for the FMDQ markets where we trade the treasury bills as well as the bonds market as well as the central bank special bills. So this is how it turned out for the day. Tuesday, it ended in a bearish mode where we saw sell-off across the 333 days to maturity bill, which went down by about 10.19 percentage points. Now take a look at your board there. The 22nd of February 2024, which is for next year, had the highest number of deals there, 8, which was a major contributor to total number of deals there, 11, worth about 43.83 billion naira. And then the second was the 25th of July 2024 paper at 9.35%, churning out about 2.5 billion naira in terms of the value of transactions on that market space. Moving over to the bond segment of the market, we saw that the average yield there, it expanded by 13 basis points to 13.5%. And across the benchmark curve, average yield increased at the short, the mid and the long segments due to sell pressures on the March 2025, the April 2032, and the January 2042 bonds instrument. Now on your board there, you have the 21st of June 2053 paper having the highest number of deals, 11, 4.6 billion in value, and the price high of 110.21 in percentage term. Now take a look at the total number of deals there, 17, and then we had the total value at 5.6 billion naira. Now moving over to the treasury bills, to the central bank special bills, we had a total number of 8 deals carried out there, but the highest was on the 25th of September 2023 paper, which is sometime next month. So, and that had about 17 billion naira. But in terms of valuation, the 28th of August 2023, which is sometime later this month, had the highest in terms of value, 2.28 billion naira. So that's it. Now I mentioned something about the primary market auction, which will be carried out today. The central bank will be rolling over about 153.98 billion naira in terms of maturing treasury bills instruments there. So And of course, we also, the market had expected that this bearish sentiment would continue for the bonds market, but for the treasury bills market, it was expected to be bullish, but no thanks to the profit taking there, and then an anticipation of this rollover on the minds of investors. They're still trying to see what they can do or what a CBN would do. And that's, we're supposed to have analysts to talk more about this. But in the meantime, we'll talk more about the equities market, moving over to the equities market space, where we saw the first decline for the markets just in the within Monday and Tuesday. So we saw a pullback, a slight blip on the market. It just pulled back by about 4 basis points, you might call it, but still within the 65,000 region. Intraday on Tuesday, the market was in the green, but as a late sell-off on the shares of Geregu, as well as some other market components, pulled the market back by just that amount. And in terms of value, it was down by about 15 billion naira, but still very much comfortable in the 35.5 trillion naira level. Now, for the market, year to date, it started the year at 51.595, just a little over 51,000 points. And then so far, it has moderated, but still comfortable at 27.46%. That's giving you better returns for your investment. So if you have your money, you have quite a number of options to put your money in terms of investments, whether in the fixed income market, the equities market, as well as the money market. And even talking about the money market, we also saw a kind of a mixed picture on that market space. Now, still talking about the equities market, moving over to the sectoral performance. The sectoral performance was broadly negative. We saw the green only on the banking counter, which was more than 0.5% higher, 0.61%. And then, of course, the flurry of red here sweeping across the 4 other counters, key counters of the market. We have other counters, but the consumer goods, industrial goods, insurance, as well as the oil and gas counter, all in the red, no thanks to profit taking. Now, in terms of the gains, we had a positive market breadth of 28 gainers against 26 losers. GlaxoSmithKline, which is still in the news, but this time the GlaxoSmithKline is still topping the gainers. It's been making gains ever since it announced its exit of operations after more than about half of a century in the country. So that was among the top gainers for the day, as well as Guinness, which went up by 10%. Then for the losers, we had the NSL, that's Nigeria Sports Lottery Tech, being the top loser there, as well as Northern Nigeria Flour Mills Company topping that list of the losers. Now, moving over to the activity chart. In terms of activity, it was kind of a mixed picture, but the reds have it there, where you saw a pullback on the total volume of shares traded there, 4.94%, in contrast to what was traded on Monday at about 317.8 million volume of shares traded there. Value was higher in contrast to the previous day, 14.91, almost 15% higher than what was traded in the previous session at 4.47 billion naira. Moving over to the deals. In terms of the deals, it was down by 8.13%. We saw the shares of Access Bank, which was the most traded in terms of volume and value, at 49.36 million units, valued at 861.16 million naira. So that's it for that market. And then, of course, I think I don't have on the board there the NSD OTC exchange. It had declined by 3.38% in contrast to what it had on Monday. Wow. So that's it for the market.
Oh, wow. But I hope we're still on the 1 trillion naira.
Yeah, the 1 trillion naira, well, we're still just around the 1 trillion naira. Just barely surviving.
Doesn't sound like we still have that. But thank you so much, Anite, for that. All right, so now let's go to AFEX and at least give you the numbers for the week. For the week ended August the 7th. We can tell you that in the last trading week, there were mixed performances across key indicators. But before we delve into those numbers, let's take a breather. We'll be back. So we can tell you, looking at the numbers for AFEX now, that by the key indicators, there were it fell for the week August 7th. The week ended August the 7th by 9.22%, closing the week at 3.94 billion naira from 4.34 billion naira in the last trading week. The number of volumes traded were also down 10.48%. For the number of deals, it's fell to 107 from 114 in the last trading week. The AFEX commodity index, on the other hand, rose by 1.86%, and AFEX export-import index also rose by 0.02%, closing the week at 228.87 from 228.82 in the previous week. Let's look at the volume of contracts now that we traded. It witnessed an increase in volume across maize, wheat, paddy rice, cashew nuts, and soybeans. And now let's look at the prices now for the week. We can, starting with maize, we see it was a green for investors. You added a 6.50% to your investment. That's about 24 naira 79 kobo for a kilogram. Cashew nuts also followed suit, almost 1% added to the price of cashew nut for that week ended August the 7th at 530 naira 77 kobo. That's an addition of 4 naira 42 kobo. Paddy rice also looking even better, more than 1% gain, 363 naira 34 kobo for a kilogram of paddy rice at the close of trade in the week. Soybean, a little less than that at 0.76% increase to close at 344 naira 8 kobo. It added 2 naira 59 kobo at the close of the week. Cocoa, we know that cocoa is a major one for Nigeria. It's a marginal gain there, though, 0.12% at 1,889 naira 76 kobo for a kilogram, added 2 naira 20 kobo. Wheat, the thing going on with Ukraine and Russia, well, it left this market unchanged for the past trading week at 500 naira for a kilogram on the AFEX exchange, commodity exchange. Sesame also unchanged at 1,247 naira 57 kobo. And also, if we see the other crops for the week, ginger unchanged, 989 naira 83 kobo. The price has been unchanged. Sorghum follows, is in that list, 300 naira unchanged. And if you need more information on that and other issues with concerning AFEX, you can go to their website or social media platform. Alternatively, we can speak with Esther Miller, who is a brand associate with AFEX and joins us virtually to talk about this cash code crop. I think that's what they call it. Esther, this is your tongue twister that you guys have on. This is the 4th edition, and you're going to have the 4th edition in a couple of days. I think the 12th, you're going to hold that, and I know you code cash crop.
Code cash crop.
CCC, code cash crop. So, Esther, good to have you on the program. Good morning.
Good morning. It's nice to be here. Thank you so much.
Yeah, good to have you. So for those who are hearing about the Code Cash Crop for the first time, tell us what it's about. And now you're having your 4th edition, what you've done before now, what to expect on the 12th of August.
Okay, thank you. For those who are just hearing about Code Cash Crop for the first time, it is a platform that we have created to facilitate meaningful conversations between stakeholders in the agriculture, finance, and tech industries to discuss viable solutions to the challenges that we face in Africa's food systems, of course. Leading up to this year's event, we have done a substantial amount of things, I must say, very exciting. Starting, of course, with the Ag Hackathon. So this grand finale, which is almost finally here, is a culmination of all the efforts that we've put in here at AFEX, as well as efforts from our partners over the past few months, starting with the Ag Hackathon, as I mentioned. So we're really looking forward to hosting everyone. We're looking forward to have these conversations. And of course, at the grand finale, attendees can expect to see and hear from some of the brightest minds in the agriculture, finance, and tech industries. So we have the likes of Yinka David West, who is an associate dean at Lagos Business School. We have the likes of Jude DK, who is a co-founder at Get Equity. And of course, Ife Adebayo, who is the digital innovation specialist at IDICE. Also, our final presentations from our finalists, they developed their solutions at the Ag Hackathon. So we're really looking forward to see who's going to come out as our number one. And of course, everybody is a winner, regardless, because of course we're solving challenges in Africa's food system. And that makes all of us necessary for the progress of what we're trying to achieve with the event.
All right, so when you talk about, of course, it's the competition, you're looking forward to the finalists and all of that. What are they being judged on? I guess it's too late now for anyone to get on this 4th edition. You will have to wait for the next edition. But for those who are already here, what are you judging them by? What are some of the criteria? What do you hope to get out of them or out of the winner at the end of the day?
Okay, so yes, although we cannot access any more entries because the event is some days away, but we will encourage, I'll use this opportunity to encourage anyone who would like to also apply next year to make their way to the Landmark Event Center on the 12th, or they can also join virtually, right? So on judging criteria, firstly, the judging process is a pitch session running for about 30 minutes per contestant, with 20 minutes to pitch and then 10 minutes for Q&A with the judges. The parameters are first profitability, which will analyze the solution's ability to generate revenue and its potential for long-term financial success. The next would be feasibility, which would be assessing the practicality and realistic nature of each proposal, considering the available resources, considering the level of technology that's currently available to us in the world. Now, this is no longer in an African context. And of course, the practicality and realistic nature of the proposal. And also viability, which focuses on the project's potential to scale or grow, because of course this is a Pan-African initiative. We have suggestions, or we have solutions rather, participants from Nigeria and Kenya, and of course we are developing solutions that will work across the continent. So how scalable is the solution? We are also going to be looking out for that, as well as viability, right, which focuses on the, okay, yes, I did mention that already as well. So those are the 4 things: feasibility, viability, the potential for growth, profitability as well.
And I believe that AFEX will work with this winner and even afterwards to try to get out some of these potentials. But some people will be wondering, oh, I'm late for this. Are we looking forward to edition 5?
Of course, very much so. Not to sound so spiritual, but of course, by God's grace, we shall be at 5.0 come 2024.
And how can people jump on that?
Although we are not yet open for entries per se, but of course they can take advantage of the fact that we have this event, the grand finale we're about to have. They can attend to see what the experience is like and also to understand what the process is like. They can start developing their solutions from now. We have the judging criteria already, which I have mentioned. They can take note of these and start to reflect what I have said with regards to the judging criteria into whatever solution they're developing ahead of the call for entries next year.
All right, thank you so much, Esther Miller, for giving us that. And Esther is expecting you at the hackathon competition. All right, thank you so much, and we wish you all the best, on the 12th of August.
Thank you. Thank you so much.
All right, let's take a breather. welcome back. It's time for crypto and see what's happening there. Now let's look at the map there, and it tells me that I can smile this morning comfortably because Bitcoin has recovered a bit. I think it went more than this. I think it got to 30,000 at some point and drew back a bit. But this morning at about 8:30, this is the price. It added 1.51%, and the dominance is now a little bit more than 48%. There you have it. Ethereum has also followed suit and gained 1.1% at 1,855.05. Just a little bit of reds around there. So we're in a safe place, at least for now, even if it's marginal. Let's look at the prices now. More prices. There you have it. Bitcoin there at 29,663. Ethereum at 1,854. And BNB also gained. We noticed that yesterday we had, I think, just one or two gains and more of losses. XRP, person of interest for some time now, is up more than 3% at that. But let's have Olumide join us now and tell us what's going on. Hi, Olumide. Good morning.
Yeah, good morning. Thanks for having me.
Good to have you. So, yeah, I think sometime between yesterday and today, Bitcoin hit 30,000 and now it's back to 29,600, yes?
Yeah, so there have been a lot of positivity around the crypto market. You know, first of all, the US Fed spoke about the fact that they were creating a supervisory program to oversee the activities or relationship between bank and the crypto market, also blockchain technology and partnership across the industry. That really alluded to the fact that it means that crypto has a future with the banking industry. Also, in addition, you know, there was rumors that the United States Securities Exchange Commission will likely approve the much-awaited BlackRock spot ETF. So that's really also triggered buying pressure on Bitcoin. And also, you know, the fact that we're seeing Binance also getting regulatory approval from the likes of Dubai and most recently Japan and El Salvador also increased the buying pressure on this asset. And that's why we saw Bitcoin hitting that 30,000 mark, like you rightly said, before moderating to the 29,800 support level. But I'll be saying that, I said that I think we should also look at the fact that Binance also faced headwinds in Nigeria. This is because we had reports yesterday from the Bureau Exchange Operation Chairman alluding to the fact that Binance has to be extinguished from Africa's largest crypto market, and that's because of the Naira pressure you're seeing. We understand that P2P market plays a major role in the AFEX market, and a lot of people are seeing Binance as a threat in the Naira stability. So we see how this plays out because Nigeria really has a significant presence in the crypto market, and such narrative might really push negativity in that sector, like what we saw when the CBN really banned banks from relating the crypto market.
Well, a lot of factors there pushing Bitcoin one way or the other. What about the U.S. inflation? Has that been priced in now? We've gone past that.
I think it's very tricky, but I think, you know, definitely an uptick on inflation number definitely would put more pressure on Bitcoin bulls. But I think it's really relatively to say it's been priced. Looking at the US dollar index and how Bitcoin has been ranging, I think the trigger right now is more positivity in that space and how liquidity comes in, because liquidity also still remains quite an issue.
All right, so there's this, I saw this thing about Bitcoin being used for e-fields, for eSIM and all of that. Is that a factor enough to move Bitcoin one way or the other?
Definitely, we're seeing Bitcoin being transactional use of Bitcoin have definitely been an uptick mode this year. And after the FTX saga, also the fact that you're seeing more traditional entities adopting Bitcoin as a means of payment. You know, there are reports that entities like McDonald's, Express are using these crypto assets as some form of digital. So that definitely had credence. But the issue right now is that clarity across stable coins regulation, particularly in the European Union and United States, have somehow dampened such upside, because we've seen some hiccups across that space. So I think while you could say yes, that traditionally adoption of Bitcoin is accelerating, the clarity in regulation has somehow dampened that uptick that a lot of experts are expecting.
Yeah, but this adoption hasn't gotten to us here in Nigeria yet.
I think it has, because if you look at means of payment, a lot of young entrepreneurs, particularly Gen Z and the millennials, particularly use these crypto assets for transaction. In fact, if you look at Google Trend, Nigeria happens to be the biggest Bitcoin market based by interest after El Salvador. Also, if you look at the fact that of USDT and stablecoin, Nigeria plays a systemic role in Africa in crypto transaction, and that's why a lot of pundits are worried that we've not gotten the much needed clarity to boost blockchain adoption in Nigeria.
All right, thank you so much, Olumide. And having that meeting, I think CBN, SEC, and blockchain stakeholders are having that meeting, I think even as we speak, and we'll see what will come out of that. Thank you so much for your time, Olumide Adesina.
Yeah, thank you for having me.
Okay, so let's see top gainers just briefly before we leave there. It's really important that we look at the numbers and see that there's been a boost, at least a bit, not double digits, but a boost there from 7%, 6%, 5%, and the lowest is so with 4%. But look at SHIB here, interesting one, hasn't been in the news or top gainers for a bit now. We see it has gained more than 4%. I think this is Ladi's favorite Pepe. It's up almost 7%. So the market seems to be gaining up, looking brighter. Let's also look at the other ones there. The losses are not so much, 5%, 4%, and 3%. GMX there being the least at 2.59%. So perhaps this sentiment, that's the bullish sentiments, will grow a little bit more and spread a little bit more, and then we will see. Remember, we are targeting $98,000 for the price of Bitcoin. That's what the miners need to stay in profit. So perhaps we will get there maybe next year or end of next year. But we'll see. Don't know how the market goes. But that's it on Business Morning today. Thank you so much for being a part of it. We'll do it again tomorrow. But before tomorrow, 10 a.m., remember, I'll be here at 1:30 to give you updates from the world of business. And you can always watch Business Morning, Business Incorporated anytime you want on our YouTube channel. It's youtube.com and then /channelsweb and go to Business Morning, and you can relive this experience every time. Until 1:30, I'll see you. Take care. I'm John McCoy.